So we go through a lot of topics on my YouTube channel, client scenarios, technical topics. Today, what I want to do is I want to go through some Reddit posts, pull in some real world scenarios that other people are seeing. There's a lot of information out there, a lot of people posting on different forums. Reddit's probably the biggest one. We're going to talk through the comments related to it to see what people got right, what they got wrong, what I would add to it, and basically how I would advise in the situation that is presented on the Reddit post. Why does the US make you file an FBAR if living abroad? Do they tax savings in an account when it hits a certain amount? So I thought this one was interesting. It's not a very deep question, depending on how far you want to take it, I guess. But I thought it'd be a good opportunity to explain a little bit about the history of the FBAR, like what the FBAR requirement really is and where it came from, and also what it's actually doing. The FBAR was a penalty that was actually introduced back in the 70s, specifically to go after money laundering efforts. So they wanted to track information about foreign accounts that US people hold, specifically to get information on potential money laundering situations. So there is no tax associated with the FBAR filing itself. So in this scenario, it talks about, do they tax savings in an account when it hits a certain amount? So no, there's no tax on the value of the assets, regardless of the amount that's in there. You have to pay tax on, say, interest earned by the account, but there's no tax on the savings itself. So with the FBAR, it's a reporting requirement that you need to do. Again, it's $10,000 in aggregate of your foreign accounts held during a calendar year. So you take the maximum value of all your foreign accounts, add them together during the year, and if it exceeds 10,000, you have to report them all. I thought this first comment was pretty interesting. I mean, they mentioned here it was introduced in the 70s, which is correct. It was intended to be an anti-money laundering thing, and now it's turned more into a tax filing requirement, and they've become a little bit more aggressive with the way that they administer it post-FATCA, post-2010. But one thing that's interesting and true is that the $10,000 has always been the number. So it's not adjusted for inflation at all, which is, there's several provisions of the tax code that are like that, which has made it over time pretty ridiculous as to the threshold level that's there. I mean, somebody that has $11,000, like, what is the real risk of money laundering at the end of the day to the IRS? So the bottom line is FBAR is something done separate from your tax return and filed with the FinCEN related to money laundering efforts. It's not specifically for tax evasion, and there is no tax associated with the FBAR. It's solely a reporting mechanism. All right, so this post by OK Storage, they say, I recently realized I didn't file FBAR since I moved to the US 10 years ago. I have 3 accounts, 2 savings and 1 DMAT account. Savings accounts are 1,000 to 2,000. DMAT account went from 10 to 120 at its peak, now around 75,000, was earning interest and dividends. Now I'm worried, thinking about the big blunder I did, assuming it was very small. Please advise on my options, please. So this is a classic situation of unintentionally not reporting the foreign financial assets. So that could be FBAR. In this case, it could also be the Form 8938. So a lot of times what you want to do is you want to look at filing procedures that the IRS has specifically put out to get people like this back into compliance, avoid penalties, and do it right going forward. And generally that just requires that you have a non-willful argument, like you weren't willfully evading taxes or anything like that, which this person, I mean, based on this post, was not. It was an accident. They didn't file these things. Now they're trying to get back into compliance. A lot of people jump straight to the Streamlined procedure. The FBAR itself is filed separately from the tax return. So it's possible that this person could just file the delinquent FBAR submission procedure. So that's 6 years of FBARs to report these accounts, make sure that any income earned from those accounts are reported on your tax return. So maybe you have to go back and amend the tax returns to report the income related to these accounts. Then you can file the FBARs and you're good to go. You're back into compliance. You do it right going forward. If there's 8938s that are also required, so that has a different threshold than the FBAR, that's filed with your tax return, then you might want to run into the Streamlined domestic offshore procedures. That's 3 years of amended tax returns, 6 years of FBARs to report your 8938 and the FBARs correctly going forward and pick up the income related to those accounts. The problem with the Streamlined domestic offshore procedures is that it has a 5% penalty on the value of the assets that you didn't report. So in this case, it looks like You actually go back to the highest missed value over that 6 years and calculate the penalty as of that year. So it'd be 5% on, potentially $120,000. So you're looking at $6,000 of penalties. So that's not a great option. That'd be a little bit painful to have to go through. If you don't do that, your other option is a reasonable cause type argument. If you go the reasonable cause route, then you're just amending, filing these forms, and just hoping the IRS doesn't penalize you. And if they do, then you come back to them with a reasonable cause argument. They used to have this program called the Delinquent International Informational Submission Procedures, DIIRSP. Under that program, you would submit the reasonable cause request with the filings. The IRS actually came back later and said, we don't really look at these reasonable cause requests, so just submit the filings. If we send you a penalty, then you can submit reasonable cause. And reasonable cause has a higher bar than the non-willful statement. But basically, you're just arguing that you didn't know you had the filing requirement. Maybe you have a specific circumstance that prohibited you from being able to do it correctly. There's no guarantee that they're going to pass that reasonable cause. But the good news is with the reasonable cause is you're not automatically subject to the 5% penalty. The bad news is they may not agree with your reasonable cause, and then you're subject to the whole thing, the $10,000 penalties for each. So it's a little bit of a gamble there. But when it comes to these situations, I mean, that's what we're doing first, is we're looking, can they just do the FBAR, or is there something wrong with the tax return? If there's an international form missing on the tax return, 2, then we look at the streamlined and weigh the difference between the reasonable cause procedures and the streamlined procedures. It's going to be very specific to each individual situation. So if you have questions about how to get back into compliance, my suggestion is don't just start filing things, because that could cause bigger problems than you had in the first place. Talk to an accountant, talk to a lawyer, make sure you're in the right program for you and filing things correctly to get back into compliance without causing a huge mess. If you have questions about your delinquent international forms, if you need help, reach out to us at McGowan Tax, and we're happy to help you through your situation.